Well, of course, we continue the roller coaster that is happening in global markets. Let's take a deep dive into the markets now with Tony Sycamore from IG. Tony, great to see you. It is all about Nvidia this week, and that is weighing on tech valuations or concerns.
Yeah, well, we've had these concerns over tech stock valuations really since Meta's earnings about 2-3 weeks ago. And it's really now up to Nvidia to stabilize the ship. It has been rocking, it has been rolling, as you mentioned there. And what you can see on the chart there, the NASDAQ 100 tested this very important support, horizontal support region, which we have coming in around 24,000 to 24,200 and bounced. So that was a good sign that we're not quite ready to break lower at this point of time. But if Nvidia's earnings do disappoint and we break below 24,000, I think it starts to confirm the idea that we have seen a medium-term top in the NASDAQ up there at that 26,182 high from late October. And that we're on our way back down towards 23,000, 22,500, which would give us that 10 to 15% pullback, which I think we desperately need after the rally from the April lows. Now, the other thing to point out is if Nvidia's earnings do meet and exceed expectations, particularly looking at that guidance for quarter four, I would expect that the NASDAQ holds that 24,200 area and can start to retest that 26,182 high. So really at the crossroads, as you mentioned, it all comes down to Nvidia's earnings tomorrow morning.
Yeah, it certainly does. It could shoot the lights out once again, and then we see it go all back up again. All right, let's have a look at our market. Really heavily hit yesterday, but today a little bit more green shoots.
The perfect storm hit the ASX 200 yesterday, and there's so many reasons for that sell-off to occur. We had obviously JGB yields ripping higher in Asia, due to the idea that we're going to see a larger than expected stimulus package in Japan, nerves ahead of Nvidia and the September payrolls data, which comes out Friday morning our time. The technical damage has been quite dramatic since early November. And yesterday it fell below the 200-day moving average, which is one that I watch very, very closely. Now, there's no buy signals there as yet. But what I do want to point out is that the RSI is now at its most oversold level since the Liberation Day low, 71.69. And we all know that that formed the platform for that rally, which we saw into the end of October. So I'm not saying that we should see a repeat of history, but we should be aware that this is what happened last time the RSI got this low.
You said a perfect storm hit the market yesterday, but the volatility storm as well. So that hit a lot of risk assets. What's the Aussie doing?
The Aussie, well, it came back down to this support level, which you can see on the chart. We've been watching it for so many months now, Jules, and it's reinforced by the 200-day moving average sitting around this 64.60 area, and it bounced higher into the close. Really some outperformance there from the Aussie and the CAD dollar overnight. Now, the onus is on the Aussie to remain above this 64.50 area because then it keeps open this upward sloping trend channel there, and it retested that 66.20 to 66.30 area, which has capped the Aussie for the past 6 to 8 weeks. But if for whatever reason, again, it comes down to Nvidia, it hits risk sentiment, the Aussie breaks below 64, let's say 6,400 to be safe. That really does suggest that we've seen a technical breakdown in the Aussie and it can trade back to 62.50.
All right, let's get into commodities. So oil trading a little bit higher. This is on some reports about China.
I like what I'm seeing in crude oil. I mentioned it last week. I feel like we've held the year-to-date lows there. We obviously have now potentially pushed back up above that $60 level. It needs to get above $62, which is the trendline resistance coming in there. And then there is the 200-day moving average sitting a little bit higher. But by and large, to me, it feels like it is trying to base here. We need to see further confirmation. But, you know, some good news out of China. The Ukrainian strike on one of Russia's main Black Sea ports certainly playing a role there as well. And I kind of like the idea that we are forming a base, but we need to see just a little bit more confirmation at this point of time.
And what about gold? Because you say that it's gone through sort of two, I guess, technical legs of a correction here.
That's right. I mean, the gold chart, we had that 43.81 high in early October. We then dropped into the 38.86 low about 2 weeks ago. And then we've spent the past week and a half trading up to 42.45. And they're the first two legs. Now, I feel like we're missing one final leg lower to complete this correction. It's still a bull market. There's nothing untowards in what I'm calling for, but a pullback towards 37.50 to me would be a very good opportunity to have a look at gold from the long side if you don't already have some gold on or you're looking to add to your exposure.
And Bitcoin briefly below 90,000.
Yeah, and look, it's all gone wrong for Bitcoin since those October highs. And We've seen again the unwind take it below 90,000 yesterday. But what I like is it's closed back above 90,000. And what you can see there is about a 30% decline from the October highs. And where I find it interesting is that the sell-off into the Liberation Day low, which was around 74,000, was about 30% as well. So we've again had a second 30% pullback. And if we look at what happened with that Liberation Day sell-off, it was begrudging. It took about 80 days for it to fall that 30%. This time it's been a lot quicker. And again, standing at the crossroads here, we really need to see Bitcoin hold above 90,000 and get back above that 200-day moving average to confirm that the pullback is complete. If for whatever reason tomorrow we wake up and see Bitcoin trading in the high 80s, then I think we're probably in the start of a deeper unwind back towards 75,000. So things could get a little bit interesting for Bitcoin if that does occur.